All right, all right, all right. Tuesday, October 15th. All right. 2019. So, had a little bit of a push to the downside today. Nothing crazy. Nothing, nothing to go nuts over. We lost, let me show you the pattern here. Okay. We lost this zone, right? We broke into the next zone, and, now we're just in that zone. So not enough data yet to say whether we're going to stay in this zone or not. But we did say last night, a push down here is still okay. But, every hour it gets further and further and further away. So then, so we have that to deal with. But we are still very much in this range. This is that orange section right here. So we've essentially just re-entered the meat and potatoes of the downward move lower than the 200. This is where the most trading has happened or overlapped at these levels. It does make sense. It's a struggle for a weekly structure level. That's the pink line right here. That's 8,200. So 8,200 we can see has been a focal point, right, this whole time. Push down, come up right at the 82, find resistance, push up, push down, find support right at 82. Use it for a little while, lose it, come back, get rejected, right at 82, push up, smash through it, come all the way back down, just missed a retest. So you got a retest here, and now you're trying to push lower than it. So we've been dancing around 82, for what? This is the 21st day under the sun. So, that's the level. That's the level to beat. So you can see peak. We were straight long, and peak ruined it. This is peak's fault. So we are going to call this peak's dump because that's what it is. Yep, there you go, buddy. All right, peak's dump right there. That's peak's dump. That's his candle. All right, so all things considered, it's not horrific. So I want to get overly, I want to be overly upset about this. Now we are starting to paint, new patterns. Now once this candle closes, we'll be able to use that as data, and obviously connect the points and see what we have as far as a falling wedge is concerned. That's one of the unique traits. Breaking of just levels, so a breakout or a breakdown, I should say, of key levels down here, and that's 8271. And then just the overall candle structure. So if we go to the 1 hour chart, we can at least sort of see the step down. And this is what we mentioned earlier in the update. All right, so this is a step down. So it's a step down, over, step down, over, step down, over. And each one of these is a range. So that's what the other chart shows, is this. These are the ranges. This is step 1, step 2, step 3. And as you range down and range down and then range down, right, eventually you find that target area that you were trying to find all along. And what we've seen is you can smash all the way up through all of those ranged out levels, all, inside of 2-3 candles. Or it's this pattern repeated, but on the way up, and then it's a staircase pattern up. So you would jump up to the first landing, and then you would, walk over and then jump to the next step and walk over, So it's essentially, you could build this whole thing out using these same range zones just over here, and walk it back up. And essentially you would walk it back up to 8733, which is your major high side weekly resistance at the moment. All right. So, it's it's a big drop for the action, right? The action was real light, the action was real low, but all things considered, it's the bigger picture really still isn't bad. We're still holding on fairly well here. So let's get rid of all this junk, and here's what we got. All right, so if we do close under 82.41, which there's a very good chance we will, considering there's 23 minutes left until we close it, but never, ever underestimate how quickly one of these candles can move. So I sure as hell won't call that until it's closed. But if we do close underneath the 20, then yes, we are bearish once again. Bearish once again, probably to 78.53. That's down here. Now, this whole thing is trend, right? You have a low, you have a high, you have a higher low, a higher high, and a higher low. So if we do break lower, then we'll call it 70. Let's just call it 78.50. If we do break and close lower than 78.50, well, then you have a problem. Now, if you go by wicks, it would have to be, let's see here. See, now this guy wouldn't even be in trend. So your trend would start here, low, high, higher low, higher high, higher low. And in that case, your low here would be 77.63. All right, but just visually speaking, and I put this on another chart to make it a little bit more clear. So this is the one from this morning. Wait, there we go. Right? So, you know, you can't dispute the angle to which price action is showing you. The problem with that is, you know, what's the next move? Right? So, you know, we've seen that pattern before. You know, we've seen it play out here, right? And then it pushed to the high side, coming off of a bigger move up, and then a big dump. Let's see. Over in this zone, this is not exactly, it's not exactly the same here. This move is very similar, but the secondary lows are just not low enough, so that don't really cut it. This is a decent example, except the preceding trend is up, obviously. You get a push up, rejection, push down, push up, and then a bigger rejection, which almost gave you double bottom action over in that ballpark. This is a fairly good example, but again, the preceding trend is up. But this is where price just kind of struggled, danced around these big levels, couple big days, couple big loser days, right? And then it eventually sorted itself out. But all things considered, you know, when you look at this on something like a 4-hour chart, you just sort of follow the trend. You know, it's not bad. This doesn't bother me. This is just price action, which is okay. The outliers here, the standouts would be the peaks and then the troughs, right? So your peak, valley, or low, high, higher, low, higher, high, higher, low. So it's an established trend. Nobody's debating that. But is it just going to play out like a gigantic bear flag? In which case, I mean, it's not. It's invalidated, but in which case you would have something like that, right? And then this would be your flag. The problem with that is the length at which this is taking, right, is taking away from the flagpole. So proportionately speaking, the flag would have ended like here. Now you're like, you know, twice to 3 times the flag. So it's just not. Yeah, it's just not a good pattern. If it did play out, though, holy smokes, we'd be looking at like 55, give or take. Yeah, a little bit of a downside move. Yeah, might catch a couple people off guard, something like that. But no. Not calling 5,500. Don't worry, guys. Take it easy. All right. But just to get rid of all the other junk on the chart, this just allows you to sort of see price action for what it is. All right, you can put lines wherever you want. It doesn't matter. But what matters is if they're respected and they make sense, right? And that's, for me, this makes sense. We are printing, you know, although sloppy, don't get me wrong, it's very sloppy. But we are printing higher lows. And until we stop printing higher lows, then it's still valid, right? It's still a valid uptrend. Although we're on the 4-hour chart, but the 4-hour chart is respected, in my opinion, as far as trading is concerned. So right here, according to this, I'd be long. This is a good long spot. Up, push through the first area of resistance, push through the second area of resistance, push through horizontal resistance right here, right here, right here, right here, and then further up. Now we do also, we have a very ugly diamond, so I'm not going to draw it because it's not really a diamond, but if you could, I'll just, here. We'll just do that. All right. So something like that, but again, for a true diamond, price is supposed to be expanding to the center line and then contracting to the right side. So from left to right, price is, it's doing a very unique thing. It's doing this, right? So it's doing that, and then 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 that. That's a diamond. And that's one of my best drawings, actually ever, of a diamond. So I really do hope you enjoy that. It is nice. So anyway, so it's not a true diamond, and that's why I don't want to show it. I don't want to confuse anybody. But the action is very unique. All right. The far left to the far right, same levels, same zone, same support, same resistance. And then you have a contrasting mirror of, a low side push and a high side push. So if you were to literally draw a line across this, flip it up, and then flip it over 180, you essentially have like what would be a very similar or almost exact pattern, just mirror image and flipped underneath. All right, so anyway, that sort of takes care of at least what I'm seeing on the lower time frames. On the higher time frames, again, we're beating up a level and we're re-entering, a zone, a trading zone that we've been in for quite some time. So this 8,200 level is the bee's knees, right? That's this whole thing is 8,200. Right, anything under the 200 is that's the target area right here. Now we do have a level up here at 87.33, but we've only just touched it. That's not where the meat is. So if you want to see the meat, you do this and you bring on your profiler. Oh, of course it's not on this chart. We'll do it on the other chart. All right. We could do it right here. That's fine. That's fine. Okay, so here is your... Okay, volume profiler. Bang. Okay. We have the 4-hour chart on now, which is fine. So this is, I want to get the drop out of there. So that's session, right? We're looking at session volume right here. And they are saying the point of control is 8239. So 8239 is the largest node, and it's the absolute point of control for everything, every candle you see on screen. All right, that's how that works. The way I have it set up is for session volume. So we can see like anything that's represented on screen. So for what we're looking at, if we could do year to date, I don't know if you guys ever used this before, but it's absolutely fantastic. So anyway, from year to date, the point of control is 3610. So just to put into perspective, we are in the 10th month of 2019, and still the point of control is 3610. Pretty crazy, right? Just goes to show you how little volume we've been dealing with during all this nonsense. All right, lots of nonsense. All right, I'm gonna make this. I want to make it dotted. The little dashes are a little. It is dotted. Why is it so? It's so horrific. Oh no. It's a little better. It's a little dark, no? Let's brighten this thing up a little bit. That didn't do anything. Nope. All right, well, that's something I could play with another day. I can't do pink because I always usually do view up, pink. We'll just make it orange. All right, there we go. A little cautionary period. All right, anyway. Yeah, so that'll go to show how much volume was down here. Now, we could do that. We'll just turn the volume on. We'll just take a look. So for the better part of summer, so, from July 19th, current, we've had 2 big volume spikes, and that's it. And 1, 2, 3, 4, 5, 6, 7 trading days that were heavy, let's just say. And the rest has been junk. This is chop. This is garbage trading. It's terrible. Right? You very, very, very rarely would ever want volume below average. Let's just put it that way. And the red line here represents average. It's not a great thing. All right. So look how often we were underneath average. And then look, you could use these averages as what do you call it? You could draw all over them anyway. So look at what volume has done since July. You know what I mean? It's only going down. It hasn't done anything to go up. Where you have on the reverse over here from April to that same point in July 11th. So 7-Eleven, just like the store. Excellent. So from April to 7-Eleven, average volume was going up. We had a couple dips, but overall it was trending up. Volume now is trending down and has been since July. So you don't have the volume that you want. So when you look over here, say, how could the point of control possibly be that? Just because of this section, basically from January to March, that area, that range, not only were we in for so long, but there was heavy trading. It was heavy trading. All right? Where this is very light trading. Volume is very low. Now, from the move, so we could say basically from our move up right here, so that's our 1 point of hesitation, point of control for what you're looking at, which I would call recent price action. This is price action that you can get very good historicals off of. You can get a very good idea on what patterns play out. If you go too far historic, right, the world was different. And if you go, too minute for like what is like happening, this 15 minutes, it's just too noisy. So you like to have good data on the screen that makes sense. And I would say 3 to 6 months, depending on your trade style. This would be for short-term swing traders. 1, 3, 5, 7 days in a trade, that type of thing. Obviously, if you're a long-term trader, you're throwing up the weekly and you're looking at, years of history. And if you're scalping, you could care less about a 4-hour chart, let alone a daily chart. All right? So anyway, we could say right now the point of control is 10,151. And look how often that level was used. And I don't mean exactly. I just mean this. I just mean put the line on the screen, turn the thing off, and just allow yourself to look at it. Given flexibility, price comes up, comes down, okay, I call that support. Given the zone, push up, come down, found support for 2 days, lost it, push up, came back, like a perfect little retest over here. Another area of support, broke it, lost it, came back, rejection. Dumped it, came back, rejection. Dumped it, pushed up, stopped on a dime. Came back, flip, retest. Push up, rejection, come down. Dancing around the level. Close below, close above. Support, support, support. Push up, come down. Right on the nose. Bang, 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 bang. Look at it. 1, 2, 3, 4, 5, 6, 7, 8 days. Body candles. Crushed that zone. Crushed it. Massive support. Lost it. Pushes up, comes back, retests it for support. Flip, false break. Pushes up once again, swing fail, price crushes, apex, dump, retest, smash. So we could see very easily that level makes sense. It might not be, any level that's relevant today, but coming back up to that zone, and I do mean that zone, I don't mean that 10,147, but I do mean that area, plus or minus 30 to 50 bucks either side, like that's going to be an important zone. Now, it shouldn't, or it doesn't necessarily need to have confluence behind it, right? Because we were looking at volume based off of this section, but look how similar you have action over here. A little bit lower would have been nice, right? Like 99.50 would have caught that as rejection. A little bit lower over here would have been nice, would have made a little bit more sense, right? But this little tester candle, come down, push up, come back, retest again. That's your low before the swing fail from the, or low before the swing high that brought you your 5,800 low. So, it has some historical play, but we're not even concerned about that because it wasn't derived off of that type of historics. But it is nice to know that it does kind of make some sense back there as well, which gives more weight to the validity of something like that. So anyway, make a long story short, price will return to the point of control in a local setting. In a historical setting, that's generally not the case, although it can be, but markets change. So like I said, if you go too far back, it's an entirely different world. It's an entirely different trader's world. The traders were different. The people were different. The money was different. The regulations were different. The countries involved were different. Like everything's so different that it's hard to categorize today's trading with trading from 5 years ago. It's just not the same. Now you could do it in traditional markets 10 years ago, okay, but the financial sector hasn't changed. It's made some upgrades here and there, but there was no drastic change. There was no transfer of wealth. There was no first-time traders, becoming millionaires overnight. There wasn't that. Financial sector doesn't quite have that. All right, anyway. Let's go back to our regular chart here. Okay, so, And again, you look at it like this, and it's like, all right, you got a pattern, you dump it down, you made another pattern, you broke out, you get the retest, bang, bang, and here you go. All right, so as far as our levels are concerned for the day, not too much changes. All the support stays the same. This area over here, I do expect to hold. That is the retest of the pattern. If we do get it, according to that other chart, it looked like it would have been ready to reverse to the north side based off of, the previous price action. But lower still, so in that zone of 78.50, and we have to start calling, this trend is invalidated, essentially. Now, if you made an A, B, C, D out of here, then this drop would be expected, but it would be expected to be, almost like a 618 move off of this low from this high. And we're currently just about, we're sitting on the 618. but we almost tested the 706. So very close to a full drawdown. But 618 would have been fine. Didn't hold, well, holding 6 at the moment. Didn't quite close the candle out yet. So we still have a little bit of time. We'll see how that plays out. All right. Okay, so let's see. Swing, it's got the money team. Yeah, Edmund Barry, what up, what up? UP, Yop, Yop. Boogra, Coca, hello. S, Taj, yo. Miles, what? Bebe? Listen, my coffee is lukewarm. Oh, man, that's awful. At least it's not cold. I don't even have coffee, so yeah, I messed up tonight. Mark, what's going on? Marquette, hello. All right, very good. Okay, so that kind of covers the action. We'll talk about dominance real quick over here. Right, we had a sideways day, and we're getting support from this previous candle. Which only has a little bit of relevance based off of this action over here. So, I'm not putting a ton of weight into it, but I'm also, this doesn't need to do this. It doesn't need to just thump. Right now we're painting kind of a double, triple bottom-ish. It was a bit of a retest to the bottom side of support zone. Well, resistance zone, what was support, which is now flipped to resistance. Didn't quite get all the way up there and actually did a tweezer top on the way, right? So you can see like these candles right here just about hit the mark right there. Same thing we did right here, little tweezer top. So it's not much different than this action right here. Move to the downside, push up, tweezer top, and drop. And now you have another kind of a tweezer bottom. Could have gotten this move here, and the tweezer top will invalidate that and then push it down further. Now, again, if we go all the way back up the range, that's okay. But ideally for like a real nice reset, for a real nice market, unfortunately, it would be at the expense of Bitcoin or Bitcoin's USD value. But we would ideally like to see, dominance drop. And this is just the first step. You know what I'm saying? We're looking at dominance, creeping into the rally zone, right? And rally zone was back in 17. That's over here. So rally zone would have been right here. And that's the first couple weeks of Well, that's basically January. January just went nuts. And that's where, most altcoins painted their all-time high during this zone right here. All right. Then we had a Bitcoin move for about 2 months. Okay, dominance dropped. All right. And the alts shot up again. And then Bitcoin started moving up again. All right. So even though it doesn't look like it, right, but the alt push started in the first week of December. But it didn't seem like it, right? Because right here, let's see, like right here, Bitcoin was making all-time highs, yet the dominance dropped already, right? From this peak over here after this rally, dominance dropped, and then we made all-time highs, right? And then we started coming down right away, but then we pushed back up again. And then we started coming down pretty hard, and that's when we started in like the 14, 13, 12, 10K zone, right? And at that point, alts were just screaming. They were just, didn't matter. You didn't even have, that wasn't even trading. You just picked a name out of a hat and you just bought it, And you wake up the next morning and it's up 60%. Those are the rumors. I mean, that's what I heard. All right, so we did close the candle out. We do have a little bit of a push up on dominance, but just a little mini test. Nothing to get excited over. All right, and as far as the gaps are concerned over here, again, we did fill that little gap over there. So futures will look, more or less in tune with spot index. So it's no big deal. All right, weekly chart. I know we touched on it yesterday. A little bit more talk the day before. But this is, now the BLX has officially updated, and now we can finally see what the hell's going on here. So, yeah, as far as the weekly is concerned, everything's still good. We're in the zone over here in which the 100 MA has provided support these 3 weeks. And then we're looking to see what's going to happen here. Now, that level, 81.94, that's a really good weekly level. I really like that level. So we are closed above it. We have pushed down just about to it for a retest, but we are also slamming our head on this trend line here. That's the red one, and that goes all the way back to this channel, which runs basically parallel to the heart line of the whole pitchfork. But from, December 3rd, and then finding all that, elevated resistance, April, 1, 2, 3, 4, 5 weeks in April, right up to May when it broke through it. And now we found support on it for the dump, right? But then we closed below it, we got rejected on it, and we're getting rejected on it right now. So that would be a nice indication on the longer term weekly view. If we were ever able to break and hold that level for a sustained amount of time on the weekly, then to start pushing for the weekly to close above it. And at which point, then you could I love looking at these things in hindsight, right? Because everything's so clear when you get a breakout and you get a retest and it's like 8 weeks later and you're like, oh yeah, it's no big deal. There's the pattern, there's the breakout, there's the retest, and bang, and you're on your way. It's so easy to see. When it's happening, you're like, oh, what is it doing? Literally every second of the day, it could just invalidate everything. So still, this is the pattern. This is the breakout. We didn't get a retest. So still not shocked if this thing does come up. Get a retest. A retest on the swing fail would be about 93.46 ballpark. And bottom side pattern, although everybody's going to draw this a little bit different, is like 96, 9700. There's no reason why price can't come up, get rejected on, say, the 20 at 98, and then dump down even further down into the 58 zone. It's 100% possible. We see it time and time again on lower time frames on other charts. It's just that the second you're looking at Bitcoin, you're like, well, I don't really want to say 5,800. It's a big drop. Right? So, it's a very real possibility. This pattern playing out comes all the way down to 4,600. So if you're a pattern trader, right, you bought the breakout and you're short. You're short until 46.20. All right? I mean, that's how that works. Okay? And once it becomes invalidated, or if you're moving your stops, right, then you would exit the trade. But otherwise, I mean, that is a target for some shorts who played the pattern. All right? Anyway, so that's the weekly. Let's talk about the daily. We just closed it out, so let's see what we got here. All right, so very interesting. Okay, we opened the candle at 83.53. We hit a high of 84.20, a low down to 80.86. Close it out at 81.55 for a loss of $207, or about 2.5%. So, key things to look at for the daily: the range, Bottom side range, bang, perfect support level. All right, top side, we did lose our weekly structure at 8,200. Okay, we lost 8,200 right here. That's a break and close below. It's a very clear and obvious break and close below. All right, we're right back into our range. So nothing changes here, right? We range out. So when we've entered the range prior from the top side, we got another big move down, which dumped it down to our green levels down here, which is just south of our Gartley entry at 78.23 or something like that. All right. When we've entered range from the bottom, we got to push to the upside. So the expectations would be another break to the downside coming down here would replicate prior price action. The difference here, not the difference, the thing to consider would be the overall structure of the whole thing. So instead of just replicating a fractal, more take into consideration what price has been doing. And price has been painting a trend. Low, high, high, low, higher, high, high, low. So in that regard, trend should trump a fractal any day of the week. All right, because a trend is live, real price action that's happening at the moment, where a fractal is a replication of something that happened in the past that could have happened in the past due to completely different fundamental or technical aspects. I just got fresh coffee. Woo, boy. Very exciting. Okay. So, I wouldn't go short just yet. But this is a reason to. A break and close underneath the 20. We do have the 200 over the 20 crossover. This is a reason to short, for sure. I'm not doing it. But this is a reason. All right. Now, I like this level. I do. I like this. I like this. I like this. I like this action here. We are under 82, so don't be mistaken. We're sitting in that zone where we're hovering 81.50, 81, 82. So we're going to be dancing around that level for a little bit. Volume-wise, I think we got screwed. Yeah, really low volume. I mean, higher than yesterday by a touch, which was basically the same as Sunday, which was like twice the volume of Saturday, which was just pure garbage. So Saturday, Sunday, Monday, Tuesday, we're incrementally stepping up, but really nothing to talk about volume-wise. It is just low, and it is bad, and it is terrible. All right, but that is something to consider when we look at price action, right? The volume itself is going down. Okay, the overall volume is going down as far as the spiked out nodes are going down. All right, price, however, is going sideways and slightly up. But this means that there's very little interest in what this is doing. In other words, traders don't really care. They're not overly impressed. So they're just taking their trades somewhere else. So the volume is low. So nobody likes this action, which means it calls for a reversal or it calls for exhaustion in current trading, all right? No matter what that trading is. Up, down, left, right, sideways. Just exhaustion, basically. All right, so any questions on Bitcoin? Everybody okay with this? There's a lot of levels and there's a lot of intra levels. This is probably the most significant for me because this is a very clear pattern. It's a very clear breakout. It's a very clear retest. It's very clear. And so this for me makes the most sense. If it does tap down, I expect support. Now, if we don't get it, then of course we don't get it, right? And then it's failed, and then we're back in pattern, and then the pattern's invalidated, and then we start all over. But I would expect support. The problem is we're getting closer and closer and closer to where that support is going to end up meeting those levels down here over at 78.50. So, that's not great, but we'll have to play that by ear. All right. Let's see. Jared, hello. Edmund says, how's Ren BTC looking? Let's see. Good move to the upside for sure. All right, so it danced around the 618, had a little bit of difficulty. Clearly, we could see there was a lot of bouncing up and down over there. The overall pattern is a rising wedge. These usually fail to the downside, so that is something to consider. Let's see what we got going on, though. Well, it's not the greatest wedge. That would probably be more appropriate as far as price action. So it is for sure a rising wedge. This level of support did just break the 50, so that's pretty key. Having this get crushed over. Oh, that's the 100. That's the 100. So breaking the 100 MA on the daily chart, that's great. That's really good. But are we tired? Are we getting exhausted? Let's see. Here's the low, high, high, low. Let's pull off of here. Where's that low at? Why is this so much lower? Okay, there we go. Let's get some targets over here. So the 1-6, well, that makes sense. That's your 618 zone, and that's why you had all that struggle over there. The 5 push up, 2-6 does have slight confluence with this area here. I'd probably call for, I'd call for a support zone here. Well, resistance as we come up to it. But yeah, this whole area right here is pretty good. I like that. 3-6 is just above the 2-3. And then the 4-2, a little bit high. Everything's a little bit high. I wonder if I come down to the body, that makes any more sense. Nah, not really. And for the 4-2, it's just nah. Nope. Do the body low here. Well, now that's interesting. So, one thing to consider when you're drawing fibs, because people will draw them differently, right? Some traders use wicks, some traders don't. Some traders come over here and they do this, and they do this, and then they do that. That is how they look at the chart. No wicks, don't care, don't use them. It's insignificant price action. That's what they say. I use them. All right, so some you can pull from them, or you can pull from the bodies. If there's areas of heavy momentum, and you think that a level got overrun, then you could do something like a wick to a body, or like a body to a wick. You could play around with it a little bit. You have flexibility. It's not as rugged as people think, but when you have it mapped out properly, you can see the respect. 1-618 on the 618, the 2-618 right on this horizontal support, like right there, very close, very close. The 3-618 is sat for sat the 2-3-6 of the local move. Okay, when you have that type of confluence, then you feel a lot better about these targets. 4-2-3 right here, top side candle on the original retrace. Look at that. All right, 1269, 1264, 5 sats. Yeah, it's cool. All right, so that's what I'd be looking at. So when I do that, what I'm looking for is Ren getting exhausted? Have we, hit all the targets? Have we hit all the stops? Is it creeping into major resistance? And I would say no. I would say the 2618 is target area. 926 looks good. Rising wedge is not good. It doesn't mean we can't push up to the 5. We pull back to the 618, and then we push up to the 26 to the 382 area. That's absolutely possible. But do I think this is over and is going to start making new lower lows? I don't think so. I think Ren looks okay. All right. All right. Didn't full hit T1. I assume that's for Ren? Is that what we're talking about? Ren. T1 is 821. 821. Did we hit 821? No, we hit 819. So, I mean, it's not over unless the stop loss got hit. So, I mean, there's nothing to worry about here. It's just a matter of, do I think it's going like the distance? And that's a little too early to tell about the 423. But the 2618, this looks healthy. You have low, a high, higher low, higher high, well, higher high, higher low, higher high. So you're well within, a local established reversal trend. You do have a bit of a W pattern here. And so you should have gotten a little bit further of a pullback, maybe down to the 20, but you never got that. And then you got these levels. You got a zone, you got a zone, you got a zone, you got a zone. Those are all levels of resistance. And every one of these levels. All right. Now, this is also based off of what? Coming all the way. This is the pullback. So lower, just lower than the pullback on the 8. I'm going to move this. I'm going to put a fresh one up going the correct way. So we can measure those levels of resistance. That's really what I'd prefer, to have that. I'll have to fix that in a second. Let me get that over there. Okay. All right, so let me get the low. What do you got here? 363. That looks like it. 363. So close. So close. Okay, now we're good. All right, so now, now that we have the correct numbers here, let's see what we got. The 382 is the struggle zone. 382. And the 36 no longer lines up, but the 423 does to the 886. So it's very interesting. Very, very interesting. The 1.6 now, the level still makes sense, but it doesn't. It's not in tune with the 382. 382 is up here. The 2.6 is now still very good with this level, so nothing changed on the 2.6. That level's still good. And the 3.6 is now, I don't want to say irrelevant, but not. This is a shelf with a false break. So this is your shelf. Everything underneath that was resistance. You had one little false break, and then you had the downside. So some people will trade the shelf, some people won't. I'm not. For me, it depends on the chart. But the 4.2 with the 8.86, that I like. I like that a lot. And I still like the 2.6 with the historical horizontal support resistance. So that one's good too. But yeah, this looks okay. I want to be worried about it. All right, let's see. I turned into a pro trader. Miles, baby lukewarm coffee. Now you turn into a pro trader? What? Well, good for you. That's excellent. MFT ready to pop. You want USD or BTC? I would imagine probably BTC, right? Because not much is going on there. Oh, God. Super low sat coins. Somebody asked about something earlier, and it was like trading at 11 sats. Like, oof. But the chart also had like less than 2 months of history. I'm like, can't. There's nothing I can do with it. I mean, there's nothing to do here. You know, it's ranged. You know, you can't. If you want to call it an ascending wedge, you can. But there's not a whole lot to do here. Just buy and pray it goes your way. I mean, that's like, what else do you want to do with this? This is what you got. I mean, that's, you know, that's it. It's terrible. You know, the takeaway here is the range, right? But one move, one sat up is going to be like 10%. So let's see right here, it's 8% up, and a move to the downside and 8% down. So you're in that zone where every sat is a struggle. I'd imagine the buy and sell walls on here are pretty thick, and that the spread is pretty nasty. So even entering this trade, which I wouldn't recommend, would be on a break and close above with a retest on it. So your level, your entry level would be 12 sats, if you can even get an order in at 12 sats. Unfortunately, your stop, which based off of price action will most likely get hit, is 1 sat away. So you got a position size for a 9% loss, right? And then your first level of resistance is under a sat away at the 100. So again, it would be a 1-to-1 with a 9% loss, of which that 9% loss based off of this action where almost every stick traverses 2 Satoshis. It's like not a guarantee, but it's a very good chance your stop will get hit. So if not, you'd have to put your stop down here to give yourself enough cushion, enough Satoshis away. And if you did that, then you're at a 17% stop loss. You know what I mean? That's brutal. Now look over here, you got the 50-20 cross, and by the time it got this action out of its system, starting to work its way up, so that's good. All right, the rejection at the 100 is bad, but it's normal. You know, and if this thing does go, I'd imagine your first stop is right here. So, you know, it does allow for some significant gains. Basically a 59% trade. But you're looking at something like this, like I would recommend what I told in Discord earlier. Right? You want to do MFT, then trade on a pair where you can actually execute with resolution and not suffer a 9% loss, because that's insane. You know, this entire candle is 3.6%. Body, open body close. All right, so far today, 0.72%. But this allows you entries and it allows you exits. All right, you're not trading against Bitcoin, so things are going to be a little bit different. And if Bitcoin, you know, does its thing, then you got a better chance of it not going your way. All right. As far as this is concerned, not really. Find something that makes sense here. Yeah, something like that. So I wouldn't worry too much about the high side because that's not really doing anything. But inside of this channel is doing something. All right. So, yeah, I mean, yes, this is resistance, and that's where we are right now. So I would prefer, one, I would trade it on this pair. I would not trade it on the Bitcoin pair. Two, I would wait for a break and close above the swing fail, which is this level that we're working on right now. And then three, I would try to buy support along this trend. All right, once we're above this zone. You have different levels over here to sort of concentrate on, as you may have something creep up into this zone here, which you already did. That's all this rejection. All right, and then you're going to have a whole new zone basically right here, which again is its own level of rejection. Something like that. All right, and then from there, it's price discovery, you know? There is no data up here. There's nothing to look at. So you would have to go with extensions. Well, I mean, you don't have to go with anything. That's what I would go with. So you got like a 1, 2, 1, 4, 1, 6 ballpark figures. And that can help determine, where price may go, afterwards. If it maintains its course. But that's what I would be looking at. Something like that. All right? So a mainframe. Very good. All right, so let's do another one, and then what do we got here? Link. So yeah, we'll take care of Link. Well, okay, BTC, we covered that, so you're good. And then we'll do CHZ. I'll wrap it up for the night. Drink my coffee, All right, Link USD. Yeah, so Link USD. Let's see, I was already looking at that. Here. Okay, so we did get that push down and the rejection side off here. This is still at play, right? The zone to pull back to that makes the most sense is right here. And that level, the actual level is 199. Of course, just hitting the top side of that range, be around 204. And the actual 618 sits at 206. So that's the pullback zone. 382 was the optional lower pullback, right? Because we lost this area of support, but we broke that level and tested the 382 in the same candle. So we kind of got screwed because that candle was so big. So now, price comes down. We just flipped the 382. We broke and closed below it. Now we flipped it, tested it north, lost it, rejection, pushed further down. Now you can see support at the 100, but the 100's new. It has a couple days of history. Where the 20 creeping up, a pullback to the 20 makes sense. But we could hit the 20 and then get a little bit momentum and kind of push these levels over here. Because this orange zone is really, that's the level. It was support, right? And then it was support until it broke. Then it became resistance. And then you got a first try, resistance, quick pull. And then you got your higher high. So this area makes the most sense. And that level, that's the level to come back and retest. This is the support resistance flip. So I think that's fine. It's okay. A 382 would have just been a tight pullback in the parabola, but the parabola is now dead. It's clearly broken. It's been invalidated, and it's over. Right. So now you just have a big flag pull up with basically You know, like you got a bull flag that's painting like this, but the overall, you know, level, it would make more sense if we came down here than if we rode this bull flag into a reversal. That being said, watch for the reversal, right? Because if you do get it, then you're not coming down here. You know what I mean? And if you get that reversal, then that's the play, right? You break out of that zone, and now you're shooting up for the distance of the pole, which is going to be something fairly significant. All right, and that's still, you know, legit, but we are like creeping up on maybe the last day before that thing could even be a flag anymore, a bull flag. All right, volume is still good overall. The chunky volume is good. The lower tier volume down here, right, is all on down, right? And so that just means that, you know, there's less interest here on the downside. All right. All right, let's see. MFT. We did MFT, just did Link, or CH. Oh, now you got charts popping up. CHZ. All right, well. Okay. Guys love these no history coins. Again, you know, this is actually painting a fairly decent trend here, but since you have no history on it, there's no telling what it'll do. We don't know if there's a history of these trends, you know, performing or doing well, or you know, notoriously breaking down and failing. Yeah, there's just no history. There's just no history. So what we can do is this we can say, all right, that pulled back to the 236 before it failed. So then we come to the downside here and come here and say, all right, how did it react to the 236? Well, it came up to the 236 and dumped, actually. And then it pushed up, right? Dumped again below the 382, pushed up again. And then right here we got the 382, little pullback, and then a push almost up to the 5. So this is good. It does mean that it's reacting better than the first time, and it is pushing these levels. So if that's the case and we remain in trend, let's see, we test, just missed the 5. Just about missed the 5. Next target area would be the 618. Your support level would continue to be this trend. Once the trend line breaks and you lose the 20, that would be stop loss out of the trade. And as far as targets to the high side, you'd probably be trying to get back to structure up here, somewhere in the like 0.0109 zone, give or take. All right, so let's do, what is that, Block Mason? And then we'll wrap it up. Okay, so Block Mason. I haven't looked at this chart in forever. Oh my God. So it is starting a bit of a turnaround here. You know, it's not as drastic of a move, obviously, and then you got the retrace, the big dump, and then sort of this sideways action over here. So this is okay. You know, these are going to be levels of interest for sure. That whole zone, something like that. So we're just creeping up on resistance again. Failed last time we tried. Yeah, holding trend, which is good. You know, high level of resistance. So break and close above that. You'd have to give it 2 days of confirmation, and you'd have to break and close above this level, since you've already failed on it once. So really your target entry is way the hell up here, And just at that point, you're getting into rejection zone right here, which is previous support, flip to resistance. So this is one of those deals where the reversal, like literally every level is going to be a problem. And it's just a matter of playing the bigger picture. You know, you're looking for entries and targeting the 200 essentially. And that's what you'd be looking for a reversal. For Black Mason, Miles, no problem. Paprika, they have more history. Okay, yeah, so we can take a look at that another day. We'll pop it up, see what the old chili coin is doing. As for Bitcoin, what have we done? Probably not much. Yeah. Okay. All right. Something seems wrong with my chart. Like, where's all my stuff? Weird. It's just gone? Is everything gone? Huh. Okay, well. Hey, can't win them all. All right, well, we'll go to the other chart. And we'll take a look at this one. So, nothing. Like, literally nothing. $4, it looks like. Is that it? $4? $7. Oh, man, we're cruising. We're cruising. All right, so again, you know, like always, we'll keep our eye on it and see what it's doing. And right now, it's just playing these ranges. So if it actually does come down and get the retest down on the pattern, then that would be interesting. If it slowly works its way up, does this kind of rangy stuff, we could be looking at another stare down. Or, you know, it's just about time, 3 steps down, just about time for a big barred up. That would be pretty, yeah, that would make sense. Yeah, and that's it. So we'll keep our eyes on it. We'll see what happens. Sound good? Excellent. All right, everybody, as always, thanks for joining me. I do believe tomorrow we're going to do the earlier stream. I just have to confirm, but if we do, then same thing. It'll probably be 5:30. 6 o'clock, somewhere in that zone. So a couple hours earlier, hour and a half, something like that. So keep that in the back of your head. You know, we'll let you know in the Discord or in the market updates on the website. All right. Until then, I want to see you guys on the exchanges and happy trading.